Changes after today's increase, the rates going up 3/4 of a percentage point. Consumer investigator Jason Knowles has more on what you need to know after all of this. Jason.
Judy, the bottom line is you could pay more on your credit cards if you carry a balance. You'll also pay higher interest rates on new auto and home loans, meaning you'll get less house or car for your money. Still, there are some things you can do to save.
The Federal Reserve is hoping increasing the interest rate for a third time will slow down consumer spending. If that happens, record high inflation could go down, potentially making gas, food, and other essentials less expensive. The problem is the interest rate hikes will also cause higher prices on home and auto loans and credit card payments.
But in the interim, in this sort of gray space, there's a lot of consumers that are going to be feeling a pinch from both ends.
Thomas Nitzsche of Money Management International, a group that helps people pay down credit card balances, explains how it adds up.
For someone who's carrying $18,000 worth of credit card debt, it's going to mean about $4,500 in added interest over the lifetime of repayment if you're only making the minimum payments.
He also says consumers could see an increase in their minimum payment owed every month.
I'm just doing what I can to get by.
You gotta plan better, you gotta spend less.
If you have a big balance on your credit cards, first write out a budget of what you owe and what money is coming in, and know your interest rates. Pay off the card with the highest interest rate and pay the minimum on others. And
it's also a great idea to contact your creditors and ask for a lower interest rate.
And how will that interest rate hike affect major purchases like homes and cars? For example, if you're about to buy a car, an auto loan of $35,000 would have cost you about $661 a month earlier this year. Now that's about $673 a month. That's $144 more a year for the same car.
A big change for new auto and home loans. You may want to lower the amount borrowed, even if the bank says you can afford more. Try to put down a larger down payment. Now, most existing auto and home loans are locked in at a fixed rate and won't be affected. But Judy, Rob, if you have a variable rate that changes with the market, you may want to refinance.
Yeah, a lot of things to consider. Okay, Jason, thank you. And this is what happened today. Wall Street closed sharply.